Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and welcome to Monday. I hope everybody had a wonderful Easter weekend. I'll say this, it always goes by too fast, doesn't it? You got to be retrained. We were off on Friday for Good Friday. Of course, Easter yesterday, and we are back at it today, and it feels like we're right where we were when we left off. We've got another gold rally, a silver's rallying. We got to start talking about getting ready for new all-time record highs on gold. Touched $2,000 to the ounce early this morning. Our toll-free number, 800-951-0592. The website at allamericangold.com. And, you know, we've been warning you about what's coming and being very, very, very careful with your money in the bank. Today, we'll play a little clip from Peter Schiff. He was on, I want to say it was, I think it was Megyn Kelly's podcast, but whoever it was, just a few minutes where, sometimes, and I don't know why, but sometimes people think that we make some stuff up or we're exaggerating the truth. So I'll let him tell you exactly what's going to happen when all of this comes undone, as we got inflation, Ukraine, China, digital currencies. Jason, all the same headlines that we had before we left. And including, once again, gold rallying again, silver above $26, an important level there. But it seems like the gold rally, it's been up, I want to say like 8 out of the last 10, and may even be 9 out of the last 10 trading days.
Yeah, I'd say the only thing that sort of happened since we were off on Friday, and I did an hour radio with Glenn Tate, was the Elon Musk thing, man. That became a big deal on Friday.
Elon Musk pretending to buy Twitter, is that what we're talking about?
Yeah, well, I mean, he made an offer to buy the whole thing, Joe, and I'm pretty sure you probably heard this, but yeah, Elon Musk says, Twitter, you need to sell your entire company to me, and I'm going to make this a free speech space, and I'm going to make huge profits for the stockholders. And then he ended by saying, well, if you're not going to do this, then I'm going to have to revisit why I'm even holding on to the stock. I'll probably sell it. So basically grabbing those people and saying, I'm controlling the situation. You're either going to sell it to me and do well, or I'm going to sell it. I'm going to bomb your stock prices. So it's kind of a little back and forth fight going there at Twitter.
Yeah, it could be. I guess that's one view of it. I have a different opinion. I actually don't think he intends to buy it at all. But again, I want to say just the fact that he said he would has the stock price up big, and I know we'll see. I don't know. You know, everyone's got their opinions. I think this mine's a little different than most.
Yeah, Joe, I think it's great. If this guy would actually go follow through, and here's the thing, I don't think Twitter will sell to them. I think what he's trying to do is push Twitter to saying, hey, we have a fiduciary responsibility to our stockholders to do what's best for them, which would be to sell to him. And I think Twitter's going to say, no, we don't want to sell to you. We want to be socialist. And I think that's the point that's going to be driven here. And if they sell to him, great. But it's all over. Everyone's covering that story for sure, Joe.
Yeah, it was a hot topic, and again, we'll see what happens. You know, I guess one way or the other, the fact that Elon Musk says that he wants to make it into a free speech zone, I think that ship has sailed a long time ago, and it doesn't surprise me. The reaction out of Twitter and the rest, that's the last thing they want. And I'm not convinced that's what Elon Musk wants either. That's just all, like I said, I don't know him. But it just, a lot of things he does seems kind of odd.
Yeah, we talked about that too. So yeah, it's like, can you trust him? No, but if he goes through with what he says he's doing, it would seem to be a great thing to have Twitter an actual place where you can trade ideas without censorship. That would be cool, but I guess we could dream, right?
I guess that's true. We can always dream of a world that way. I mean, they've taken it so far in the other direction. And again, I guess I wish I had more faith that that's what he really intended to do.
Well, like I said, we'll see. First, Twitter makes the decision whether to even attempt to sell it to him, and if they don't, then it'll be Elon Musk dumping his stock and watching Twitter go down. And we'll have to see if that actually amounts to anything. So, interesting stuff, though, Joe. It's interesting, because we have just these. You have this huge thing called the internet, where you should be able to do whatever you want, whenever you want on the internet, and it seems like every single year there's more regulations and more censorship and more controls over what you get to do on the internet.
Oh, listen, it's not just the internet. It's everything. I mean, look at what's happening in Russia and Ukraine. That's all about control. Speaking of control, there's a plan. We're trying to guess what that plan is when it comes to your well-being financially is what we focus in on here. Over the weekend, another country has admitted that they also have brought all their gold home, and we've been speculating as to what gold is going to play in the new world order of things. We'll tell you which country it was and why so secretive. We'll talk all about that. Don't touch that dial. Patriot Radio News Hour. We'll be right back. 800-951-0592, Patriot Radio News Hour. Joe and Jason this morning. Hey, we got gold up. Right now it's off the highs, but still up about $15 here, $19.85. Silver's up almost 50 cents, $26.15. Wall Street is mixed. The one, I guess, economic data point, home builder sentiment falling again. Starting to see some cracks in this housing market. I'll tell you this right now. And we've said it all along. We're a little unsure on housing. I'm leaning more and more towards it's not going to end well. Because let's face it, rich people, if they think the price is going to go lower, they'll wait to buy things all cash. And we're starting to see a little bit of that. Home builders are starting to see some of that. We'll see. But again, cracks. I'm not saying it's totally cracked, but there are signs. Housing, probably the strongest part of the economy that remains, possibly showing some early signs of a slowdown. We'll keep that in mind. Bank of America had earnings out. Now remember, the bank's earnings have not been good. Bank of America beat expectations today, but they did something that the other banks weren't doing, which is Bank of America actually lowered their loan loss reserves from COVID. All the other banks are beefing up their loan loss provisions. And the only reason why I bring it up is I think Bank of America just wanted to have one more good quarter. And next quarter, Jason, I think they're going to have to go back the other way and add to that. But again, not a good start for the banks. And, of course, we've been warning you about having all that money in the bank. And if things go the way – and remember how we think they're going. This is going to end badly, like every other bubble before it. And what we've learned from 87 to the tech bubble to the housing/financial bubble, every bubble that bursts, Jason, seems to be bigger than the last one.
Well, and this one has extreme inflation attached to it, which makes it much more dangerous than the last bunch we've been looking at since the 80s. And Joe, if you had $100,000 in the bank in 2020, what are you able to buy with that now? $75,000 worth of stuff, maybe, right? Maybe less?
Maybe, yeah, and maybe less than that. And it seems like it's just continuing to head in the wrong direction. Remember the 2% inflation target. And that was, courtesy of Ben Bernanke and the old lunch lady, Janet Yellen. And I said way back when, and this was going back to like '06 or '08, something like that, that was just going to be the entry-level price. Like they were going to start it there. This morning on Squawk Box, or no, I guess, on CNBC, I don't know if it was Squawk Box or what show, Muhammad El-Arian, he's one of the regulars, made his fortune in the U.S. bond market. He was out on TV this morning, Jason, saying, hey, guess what? The Federal Reserve, by the time this is all done, is probably going to have to up what the new inflation targets are going to be. So imagine when we come now. Imagine we're going to have the inflation, which we have now. They're raising rates, and we're getting ready to set up for the crash. The only question is, when is the crash coming? Is it going to be this year, or is it going to be next year? I don't think there's any other options. I think those are the only two options. It's either going to happen this year or next year. And after that crash, what are we going to be left with? And the answer is going to be a much slower economy with much higher inflation. And it's exactly, once again, and I hate saying it, but once again, exactly what we've been telling you from the get-go. Peter Schiff was on, I want to say it was Megyn Kelly's podcast, and he was warning. He covered a lot of ground, but one of the things that caught my interest was he was talking about what was going to happen after the next crisis in regards to the money in your bank accounts. Jason, do we have that clip ready?
Yeah, I think we're ready. Go ahead, Jack.
Then we're going to have to suffer a severe collapse, a financial crisis, far greater than anything that we had in 2008, and nobody gets a bailout from anything. No banks get bailed out. They have to fail. And in fact, when they fail, the depositors are going to lose their money because there's no FDIC money either, because that would have had to come from the Fed. So depositors lose their money, companies go out of business, investors get wiped out, jobs get destroyed. It's going to be a real mess in the end. That's why they're waiting so long and kicking the can down the road for as many years as they have, because the consequences are so horrible, nobody wants to face them. But every time we kick that can down the road, we make those horrible consequences much worse. Mm-hmm. So since we've been doing it for so long, you can only imagine just how horrific things are going to be in order to avoid hyperinflation, which would be even more catastrophic.
All right, so let's say we elect Peter Schiff as our next president in 2024. What's the first thing you do?
Demand a recount. No, well, they're not going to elect me, obviously. But if somehow I could become the president of the United States, there's a lot of things I would do. But in the short run, we would have to still go through some pain. There is no quick fix. But what I would do is enable the economy to fix itself over the long run. Because the problem with the economy is government and the Federal Reserve. We need a free market economy, not a government-planned economy. We need the government to dramatically reduce its size and its cost so we can return those resources to the private sector. We need to dramatically deregulate the economy so that the free market can regulate it, not a bunch of bureaucrats. And we need to return to sound money, not money that can just be created out of thin air that has no value. So,
The gold standard?
Yes, that's the standard that the Founding Fathers put us on. They did it for a reason. It worked very well for as long as we followed it. So we just need to go back to it. And I'd like to get rid of the income tax, the federal income tax, the corporate income tax, Social Security tax. Make government much smaller. I think the only thing the federal government should do is national defense, and it still spends too much money on defense. I think the rest of it should be covered by the states, although most of it shouldn't be covered at all. It should be taken care of in the free market. But, America could be a very prosperous nation again if we repeat what made us so rich in the first place. But right now we're broke. We just don't know it yet. We're living off of borrowed money. We are the world's biggest debtor nation. We owe more money than all the other nations combined. We're running enormous trade deficits with every nation on the face of the earth. So our economy is completely incapable of producing the goods that we consume. We borrow from the rest of the world because we don't have our own savings. We're basically being supported by the rest of the world. The world has to bear the cost of subsidizing the U.S. economy, and that's going to come to an end. And if we're going to stand on our own 2 feet, if we're going to be productive again, then we're going to have to return to the limited government, maximum economic freedom type economy that we had in the past.
There you go, Joe.
So think about it, a lot there. Let's start with the first big point. Right? There are no bailouts. Right, and talked about the next crash, and he puts it more bluntly than I. Of course, and I've told you, the FDIC has no money. No, well, they have some, but nowhere close to being able to. They can make the FDIC insurance $1 million. They don't have any money. They've got $130 billion. There's $19 trillion in deposits in our current banking system. It can't be done. And, of course, he's saying, hey, listen, you're going to lose all your money. And I'm just like, hey, at least be under the 250. He could be right. This could be a situation, and really the way the law is written or the way the rules are written, they can simply come in and say, you know what, hey, I know you were under the 250. But, you've had $200,000 in this bank for the last 10 years. You obviously don't need all of it right now. So tell you what we're going to do, right? And they're just going to pick a number. Hey, we're going to let you have 50% of it, 40% of it, 30% of it, whatever it is, and then the rest of it's just going to be nothing more than, I guess easily put an IOU to the bank that, hey, maybe someday in the future we'll let you redeem that money. But as of right now, we don't want to say we took it from you. You just can't have access to it, Jason.
Yeah, Joe, I agree with that. Me personally, Joe, I believe that we're in a market crash already. I believe inflation's 20%, and if the markets are sideways, and I think the housing market at least goes sideways, if not drops down some in the future, and if we continue with 20% inflation, Joe, this is a crash. We are experiencing a crash, and so what Peter Schiff is talking about, it's exactly true. We're looking at some really tough times coming, Joe, because you can't live off debt forever. You just can't do it. At some point, the Ponzi scheme collapses, Joe.
So then think about some of the other things he said, which I thought he made some, really good points. If we go back to when we were that prosperous nation, he talked about going back to the gold standard, something where I think you're hearing a lot more of these nations talking about getting back to sound money, getting back to a commodities-based money. Look at what gold's doing right now. Wake up! The bond market is skyrocketing. 10-year note today almost hit 2.9. It's so crazy. 2.9 skyrocketing. It's got to go a lot higher than that. And the fact of the matter is gold doesn't care. It doesn't care. Gold's not supposed to go up when bond yields rise unless it's rising because they're warning of the next calamity. This is exactly what we've seen. This is almost carbon copies of what we've seen during like the tech bubble, during the financial crisis, right? We started seeing all of a sudden people that, the gold's a relic and gold's dead. Remember that stuff? Remember when they were, gold's that ancient relic and gold's dead and this and that. And when bond yields rise, gold goes down. That's dead. And when that happens, it tells you the market is getting ready to make a major downdraft into for us, for our pocketbooks, and this is what we're up against. And I think, unfortunately, before this is all said and done, a lot of things are going to go wrong. The primary one's going to be, obviously, I think all of the rules that they put in place are all going to be used. And I remember when they put them in place after the financial crisis, none of them were designed to protect you. None of them were designed to protect me. They were just designed to protect the system. And speaking of the system, speaking of gold, another major country announced that they have repatriated all of their gold. Matter of fact, the country in question, France, has now admitted that, yes, we have repatriated all of our gold. And matter of fact, we did it years ago. Why the cover-up and why tell the truth now? We'll talk about that next. 800-951-0592. France is now saying all of its 2,435 metric tons of gold resides within France, essentially announcing that they have repatriated all of its gold. One of the things that was interesting in the announcement, Jason, is they ended up repatriating it and starting in 2013, wrapping up in right as China was granted status by the IMF there in 2016.
Yeah, Joe, I really don't know how much gold the Fed actually is holding for other countries anymore. I mean, a lot of countries were trying to get in the 60s, remember, Joe? So with the way economics has been this century from 9/11 on, I would say there's a lot of countries that are already have their gold in place, Joe.
Yeah, and it's just, remember, and this is very important for everybody to understand, especially after England sold all of its gold. Europe made an agreement that between all of the European nations, and this is going back to what I'll call the old school European nations, Italy, Portugal, Spain, Germany, France, Denmark, before the Eurozone countries, they all had agreed because they were net sellers of gold. They were part of what I'll call the Alan Greenspan way of, hey, we have unlocked the secret of fiat money, and we are the stewards of the world, all that nonsense. Of course, none of it turned out to be true. They were selling. They agreed, hey, we're only going to sell 500 metric tons a year. In other words, they were like, hey, we don't want to do what England did, because look at what England did. Guys, it set the price down way too fast. But if we cap the selling at 500 metric tons, hey, we can still get $250, $300 an ounce until we sell out of all the gold. Well, that came to an end. The housing bubble hit, the financial crisis hit. When you think about central banks, especially the European central banks, had been selling gold for almost 2 decades. And now look at today. Not only is nobody selling it, everybody wants it back. Right? Let's bring it back home. Let's add to our positions. I mean, you're talking literally about a 1,000 metric ton difference from selling 500 metric tons a year to purchasing 500 metric tons a year. On top of all the repatriation, Jason, that's happening, it certainly seems to me. It certainly seems like a lot of sense in maybe the world is going to go back to what, and remember what Peter's, because he made some great points. When was America at its best? When did America emerge as a superpower? Well, it did it on the gold standard. It did it on the concept of small government, right? I mean, you know, it did it on the concept of low taxes, small government, freedom, and of course, obviously, a gold standard that prevents this reckless deficit spending that really, you know, when you think about it, is nothing more than a drug. We've been hooked on heroin called fiat money now, really going back all the way to Bretton Woods, Jason.
Yeah, that's correct. You know, the central bank was put into place in 1913, and it's been downhill ever since. And you know, Bretton Woods was another step down. 1971 was another step down. And when you ask how lucrative and how well a country can prosper without a central bank and with a gold standard, you just look at, you know, my favorite president, Andrew Jackson. He eliminated the central bank of his time. It was a hard deal for him. I mean, it took two terms to do it, and he basically did it by himself because the banks had bought most of the presidential candidates, the House, the Senate. You know, they always got their fingers in everyone's pockets. And what he did, Joe, is he eliminated the central bank. He paid off the national debt, the only president to ever do so, paid off the national debt. He had surpluses coming in that were so great that he just gave it back in equal to all the states. And all of this was done without federal income tax. Just like Peter Schiff was talking, just get rid of the federal income tax. Make the military smaller. Make the federal government smaller. That's what Andrew Jackson did. He came into office. He eliminated 10% of the federal government. He immediately fired 10% of everybody. You know, Joe, and it worked. Westward land movement and tariffs is what paid for whatever federal bills needed to be paid. Otherwise, the states were supposed to take care of their own business, Joe.
Yeah, and again, I think the biggest thing that we're looking at is we've been living a lie. We've been living off of borrowed time and borrowed money. And one of the things that really, for me, is all you really need to know. The United States hasn't run a trade surplus in almost 50 years. And you cannot be, on top of the financial pyramid when you're a debtor nation. And it's something where this is, unfortunately for us, this is what we've become addicted to. We've become addicted to free money, cheap money, that is I guess money created without any labor going into it, and the world just doesn't work that way. And now we're seeing primarily the Chinese saying, hey, wait a minute. We're the country that provides the world with everything. We want to be the superpower, and really this is what we're up against.
That's right, Joe. We've been put into a weak position purposefully. And now the powers that be are going to do what they do, Joe. The moneyed powers of the world are shifting things in whatever direction they see fit. And it sure seems to be American unfriendly, Joe. It really seems to be China friendly. And, digital currencies and all the stuff we talk about, it's all going in the wrong direction. We've lived off the world reserve currency for quite a long time, a good solid 80 years or so. And now it doesn't look too good, does it, Joe? It looks like we partied, and now the party is over, and we're looking around. It doesn't look good, does it?
No, it certainly doesn't. And when you've got people that, Muhammad El-Aaron, whatever, you want to think about the guy, he's become a very, very wealthy man and calling these things and sitting there and saying, hey, America, get ready and be your own central bank. Listen, this is what every central bank in the world is doing right now. You better be doing the same thing. Patriot Radio News Hour. We'll be back right after the break. 800-951-0592. Gold's up $17 here, $19.88. Silver higher as well, up about 50 cents, $26.20. I'm going to do what I do. When I can, I do it. I'm going to pretend today didn't happen. Right now, 23 and a quarter for $20 gold pieces. We're going to go back to Friday's price, and really Thursday's price, because the gold market closed on Good Friday. $2,295, so below $2,300, and obviously gold going to crest 2,000 here. You're not going to be able to buy it for that little again if it stays up there and continues. And unfortunately, here's the problem: gold's going a lot higher than 2,300 or 2,200 or 2,400 or 2,500. There's a reason why every major central bank in the world is either buying gold, repatriating their gold. I think they already know that the next monetary system is going to be going back to sound money, and you better have yours. 800-951-0592, U.S. $20 gold pieces, $2,295 today, Jason.
Yeah. How many days do we go on the air and tell everybody about the importance of owning gold? How long have you out there worked to save that nest egg, and you haven't decided what you're going to do with it, but you could keep it in, I guess, a 401k, I guess, or you could keep it in the bank. You could pull it as cash. These things are being destroyed right now, and you should not be putting your hard-earned savings into anything but precious metals. And the deal we have today, this is as good as it gets. Every day is a good day to buy. But Joe, I mean, gold is getting. It looks like it's going to be a racing up to record highs. It looks like you've called it pretty well.
Well, we're watching. We're on obviously all-time high watch now. And again, technically speaking, if that means anything to anybody, gold has broken out on the charts once again, and we're just going to continue to see all these same patterns that we're seeing. Higher highs, higher lows, higher highs, higher lows. Then you have a breakout, right? Then gold comes back, and then it does the same thing again. But the higher low, then we get higher highs, higher lows, higher highs, higher lows. Breakout, then gold comes back a little bit, higher highs, higher lows, higher highs, higher lows. So remember the last breakout we touched a new intraday all-time high, didn't close at an all-time high. Gold came back, right? So after that breakout, we had a higher high, and now we're getting higher highs, higher lows, higher highs, higher lows. And once again, I think we're setting up for the breakout. And usually when you watch these patterns, what happens is just like what happened to that first time it tries to get up to that new all-time high level, it may fail, but every time thereafter you got to get ready for the big breakout. And if that occurs, what's going to be the new all-time high record gold price? I don't know. Is it going to be 2,300? And then I think there again, we'll have a pullback, but I don't think it ends there. I think we're in for a multi-decade, possibly long run where you see gold continually hitting higher highs, higher lows, breaking out, and then pulling back, and then the next breakout, going into even higher levels than before. And I think this pattern is going to repeat itself over and over and over again for a significant length of time, Jason.
Yeah, the record high is like $2,043 for the record close. I mean, we could make that up in one day. That's all it would take, Joe, is one $50 up bump in gold, and we're there, right?
Yeah, so that's why I said we're actually, we are on, record high watch, if you will, because as Jason said, we're one little move away from gold hitting the new record close. It could happen at any day on any news. And really, when you look around what's happening in the world today, the news cycle just isn't very good. We're talking a lot about Russia and Ukraine and Russia and Ukraine. Listen, oil prices are back to where they were when Joe Biden announced all of that oil coming out of the strategic oil reserve. There's no tricks left on oil. Oil's not done. We haven't seen the high in oil yet. Get ready for that. But no one's talked about China either. China is shutting down. I mean, China's got like 100 million people on lockdown. You know what that does to the supply chain and what that's going to do? That's going to make inflation that much worse on top of everything else.
Yeah, I think China's where they're testing emergency powers, Joe. I mean, they're locking those people up in those high-rise towers, and they're out there screaming out of their buildings because if you have a child that's COVID positive, but the parents are COVID negative, they're taking their children. And I don't think it has anything to do with the economic situation, except for the fact, Joe, that when things get crazy and food gets harder to get and the prices keep on skyrocketing upward, I think China's and I think the world is watching. How do you keep a population from completely erupting when we really can't stop these people if they really go crazy? If everyone went crazy, Joe, and things were really bad, there is no controlling that. And I think they're kind of watching to see what happens if you create the emergency in China, Joe.
I'm going to say this. Over the weekend, a railroad company said, hey, sorry, we've got to limit the amount of fertilizer that we're allowing on our rail lines because we're so backed up. We don't have the capacity to put it all in there. It's nuts what's happening. We'll be back after the break. 800-951-0592, $20 gold, $22.95. I want to clarify that is as long as gold remains below $2,000 to the ounce. Right now, gold's up 19 now, 1990. Gold has touched 2,000 already this morning, and really a pattern that you tend to see pulled back and is now climbing all the way back up. And again, it's really about risk. What is it telling you? And what the markets are telling you is get out of the risk. What's the risk? Stocks, bonds, right? Now potentially we'll see, is housing now a risk? The housing sentiment from home builders falling again. This is the lowest level and really since the COVID outbreak. And so there's a lot of things, but really what the gold markets are telling you is, Jason, everybody's getting out of risk, which is in the debt markets, which is your stocks and your bonds.
It's exactly right, Joe. And here's the thing, a lot of economic indicators, which kind of tells you how things are going in good times and bad times in the past decades. When it comes to gold, is quite frankly doesn't matter. Gold, like lumber, copper, and these other things, at some point gold will race with the inflation. And so Joe, I really believe that inflation is the plan for the Fed. There's this theory that you can inflate your way out of a debt money system. You can bring your system back by inflating your way up to it. You know what I mean? So it's a debt money system. You inflate the prices of everything. Now you don't really kind of owe as much. It's a theory. And Joe, maybe we have 20% inflation into the next year, maybe into 2024. Could you imagine? Could you imagine if inflation stays?
When I heard Mohammed Al-Arian today coming out and essentially saying, "Hey, get ready for the end of the 2% in target. We're going to need a much higher target." That's really all that you need to know. And again, this is why people listen to the show. Listen, you're going to hear everything you need to know. You're going to hear it first. You're going to hear it way before everybody else is saying it. And it just allows you to be able to prepare at a much lower cost. Listen, the price of gold's not going down. It's going to go. Now, is it going up in a straight line? Nothing goes up in a straight line. But the bottom line is gold and commodities are going to go a lot higher. Now I even see articles where people are starting to speculate, because China's expanding these lockdowns again, that China's potentially doing it on purpose.
I heard Sunday,
saying
Joe.
that, hey, wait a minute, China's locking down. They shouldn't have zero COVID policy. This COVID thing isn't that bad. It's not what we made it out to be, but they're doing it on purpose just to really put the screws to the U.S. dollar.
I heard yesterday, Joe, that the China shutdown in Shanghai is indefinite. They termed it as an indefinite shutdown. How's that?
Yeah, and listen, the ramifications for that, I know, and again, because it's not sexy, everybody wants to talk about the Russians and war and all that stuff. This is something really ultimately with them going to, as Jason said, the indefinite lockdown. This is much more significant problem for us than a lot of people realize what it's going to do to the supply chain, and the cost of everything is going to skyrocket again.